Let's now take a look at currencies, particularly in the wake of that latest Aussie jobs data. ATFX Chief Market Analyst Nick Twidale joining us here. Nick, welcome. Of course, those job number higher than expected, although a bit of a bump in the unemployment rate at the same time.
Yeah, the unemployment rate bump was expected, but I don't think we expected that extra 20,000 jobs.
All right, which only fuels speculation that the RBA may well opt for a rate hike at its August meeting. How's this playing out for the Aussie?
I think it just means more topside for the Aussie, probably with the massive exception of against the yen, where we've seen huge increases in the yen recently. But I think for the Aussie, I think we're seeing US dollar yields grinding lower at the moment. I think we've got to keep an eye on that US data. But for the Aussie, a rate high, it means it's probably going to break higher. And I think, we will challenge those resistance levels just under 68 cents, probably relatively shortly.
On the flip side, where you see the greenback tracking at the moment? I mean, there's so much of the Trump trade going on at the moment, isn't there?
Well, it is. It's. I think I was looking at it yesterday saying it's a bit of a tug of war, really, isn't it? You've got the fundamentals that are coming through, weaker US data, expectations. I mean, it's pretty much 100% for a September rate cut. As far as the market's concerned, whether the Fed are quite on board with that, I'm not entirely sure. And I think the Trump trade should lead to a stronger dollar and higher yields. So at the moment, the market and the underlying fundamentals, to me, are winning out over the last few days. I was expecting a bit of a spike on Monday and Tuesday. We didn't really get it. But I think, as far as when we look at the Aussie and we look at the rest of the majors, I think still it's probably more downside for the greenback, and we'll see the Aussie extend further north, cable, and the euro.
Now, elsewhere, Nick, of course, we talk about sticky inflation here in Australia and whether that's going to lead to a rate hike. Interesting what's going on in the UK too. We just had a reading on inflation there. CPI, look, up 0.1%, but enough to fuel a bit of a bump in the pound.
It has, and the pound's broken technically quite well, and it's gone through that 130 level, which was a key site. I think, and you sort of look at the UK now, and it's kind of, in this weird way, there's been haven flows going to the UK because there's geopolitical concerns in what's been going on in Europe, similar to what's going on in the US, and inflation still is sticky. We don't seem to have had the knee-jerk reaction after a Labour government getting in, which you sometimes get from financial markets, which normally leads for the sterling to depreciate. But it's held in there really well. So I think, once again, looking at currencies, I think cable's probably got some more topside as well, in line with the Aussie.
So in the wake of that inflation read, traders pretty much putting an August rate cut to the side now.
I think so now, and they were, and I think the economy over there, you hear this sort of like cost of living crisis bandied around a lot in Australia and a lot in the UK, and there's hopes for cuts coming, but I think that's been put aside now with that CPI print.
And of course, the other currency that's been very much in focus has been the yen. Look, it did rise again. Speculation there, more intervention from the Japanese authorities. What are we seeing there at the moment?
I think there's certainly been intervention, and whether we got it yesterday or not, the moves have been sharp. I think the BOJ, and I've got no confirmation apart from years of experience and being old and having seen them so many times, I think they're getting it right this time. They're hitting the market, they're hitting dollar yen, when the underlying fundamentals are on their side, whereas in the past they've waited for it to go through a line in the sand and hit it, and then, as happened in April, the fundamentals drive it back to that level. Whereas I think they're still actively involved in the market, and whether they're hitting it, which they have done, or whether they're checking rates, it's certainly scaring the market. And I think we've dropped 4% in the last 7 days in dollar yen, and it's been good. But really, the underlying side of it, the US side of it, is probably the dominant factor, and they're just giving it a good knock along on the way, rather than how they have done in the past, which is to wait when the underlying fundamentals are still pushing against them. So there's probably a bit of backslapping going on in Tokyo at the moment.
Right, okay. So, Nick, all that said then, what's your favoured trading pair at the moment?
I think looking ahead, short term, looking ahead for tonight, we've got to look at cable again. I think that's broken nicely to the top side. We've got employment data over there. So if that employment data, similar to what we've got in Australia, there's these parallels a lot at the moment. If that shows a tight labour market over there in line with the CPI print, then you've probably got more top side. And euro, we've got the ECB, but I'm not really expecting too much from the ECB. But for volatility, you cannot go anywhere apart from the yen. Now, direction-wise, you've probably got two big figures either side to fade moves. But I think it's now a sell on rallies when even a week ago it was still a buy on dips. So I think there's a fundamental change there.